Yes, sir. Yes, sir. Yes, sir. What's good, y'all?
What's poppin'?
We in
What it
here.
do?
We in here.
What it do? What it do? What it do? What it do? What it do?
What's up, YouTube? This is Mike Check Productions. Mike Check, your ball head beat maker, your favorite ball head beat maker. I'm your co-host.
Man. And it is me, Simply Ken. And if you know what I say, if I did it once, I'll
I'm
do
gonna
it
do it
again,
again.
ladies and gentlemen.
Oh yeah.
What's goody?
What's good, y'all? Make sure y'all click the like button. I know y'all happy to see us because we happy to see y'all. So make sure you click that like button.
I ain't happy to see y'all because I can't see them.
Are you
Say
not
something then so I can
entertained?
see you. Say
Yeah, man.
something if I can see you.
Let's talk about it. What's up with y'all, man? Why y'all not hitting the comment section? We getting the views, but we're not getting people to comment.
I think they scared. I think they scared.
I
If
think
you
that's
scared,
yeah. Just say
go to
so.
church.
If you scared, just comment scared. How about
Comment
that?
scared. If
We
you
want
bout
y'all
it,
to join
say
the
something.
conversation. We want you to join the conversation. But
You
if
know
you
what?
can't, just throw it what up in the
Let
comment
bro. You
section.
know what? I'm new to this social media game. You know what I want to know? We
What's
got
up?
101 subscribers. I just want everybody to check in where they from. I just want to know where people are seeing us.
Yeah, drop your
You know,
locations in the comment section, man. Come on,
drop
y'all.
drop an addy, not addy. I'm sorry, just location.
Yeah,
Look,
right.
look, look.
We
I
ain't
was trying
trying
to
to.
be young.
We ain't stalking.
Nah, I'm gonna be stalking. I ain't even like that, y'all. But no, for real, man. One of the most motivating factors, I'm assuming in this space is just the feedback, the affirmation, that what you're doing has value. And I think
Yeah,
this has so many layers. It has views, it has clicks, it has impressions. But bro, I'm old school, man. Say something to me. If y'all
thanks.
know, y'all gotta say something to me, bro. I am not the I can't read can't read well, I can't look at numbers and just say, okay, well they must be. I don't know. Just
Yeah,
check in where you at, bro. I'm a well-traveled gentleman, I like to say. Um, so shoot, talk to me, man. Maybe we can talk about some food, some spots down there. And truth be told, bro, I move around, so I might pull up on y'all. Say what's
bro.
up, say what's popping.
Right. We're real people. We're not YouTubers. We're not content creators. We're just under the banner of content creators. Bro, we real life. We outside for real. So y'all
Outside.
don't have to look at us like we celebrities or something. Bro, we real just like you. Drop something in the comment
Yes.
section. Talk to us. We'll talk back.
Let me hold some. I'll throw my cash up in there, brother.
Yeah, facts. We regular, just like everybody else. We just do it better.
I like that. I like what he
Mhm.
said. What he said, y'all.
So,
uh,
what we got today?
man, you had a pretty good topic, bro.
Yeah, we,
What
we
are
had
we
a good
talking
show.
about?
We had a good show. What was you talking about the black community and how we can improve the black community? And one thing you had brought up, you was talking about understanding credit because we were
Yeah,
talking
bro.
about solutions and what was the origin and how do we reverse this thing. And I was curious to get your input on understanding credit because you are a serial entrepreneur, as you said, almost 2 decades and long and strong. Pause.
No, ain't
You
no
have a
pause.
long and strong. Okay. You have a wealth of information that I think would be definitely beneficial to those who are listening, right? Those who are watching. So I want to delve into this understanding credit because there's a lot of sharks out here that are just taking your money, right, to repair your credit, not really looking out for your best interest. And so I want to peek into the mind of Ken, simply Ken, and get your take on understanding credit, how to leverage credit, how to expand your credit profile, right? So that you
hmm
can leverage other things that you got going on in your life. So when you hear the word
Absolutely.
understanding credit, what is the first thing that you think of? How can you describe that or break that down to the audience?
Um, I think the simplest way to understand it is it's the value of your word. Um, Your credit score tells people how well and how frequently you do what you say you're gonna do in terms of finance. Um, Credit is a abbreviated form of the term credit worthiness. Um, if you guys don't know, your credit worthiness wasn't always a tied to a score. I mean, yeah, a score. Years ago, I think my grandfather was talking to me about it. Um, a man's word was his credit. I guess my
Yeah.
grandfather, yeah, and I may be
Hey,
throwing this
hence
story up.
hence the term. No, 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 no. Hence the term. My word is my bond. That's your
Yeah,
glue. Yeah.
yeah, yeah. My grandfather, I think he used to tell me he used to go down to the store and he needed to get some milk for the family, and the milk was a nickel or a quarter, right? And he'd tell Mr. Johnson at the milk store, "Hey, if you give me the milk today, I'll give you your quarter on Friday." And Mr. Johnson, without a problem, give him that milk, and like clockwork, second he step out of school on Friday, he goes straight up to Mr. Johnson, give him that nickel or that quarter, and he paid his debt. That allowed him to get bread, cheese, eggs. Anytime he
Mm.
was not right there, didn't have all the funds for what he needed to bring home for mama. Um, if he needed anything that he couldn't afford at that moment, his word was his credit. So to add that to today, um, it's a reflection of your financial habits. Um, there's an algorithm out there that evaluates how you manage, um, how you leverage and manage other people's money. It's how risky are you? That's what credit is. You think that makes good sense, Mike?
I was gonna say. I was just gonna pick. Yeah, it makes total sense. I was just gonna say, along with your illustration that you gave, just think of borrowing money from a relative or a friend. When
Mm,
you borrow, like I don't. We just speaking how we're speaking. Not saying you should do this or how did you find yourself in this predicament. But let's just we're talking to the audience, so we have to. When we're in Rome, we got to speak as Romans. If you borrow money from a friend and you pay it back, you've built up good credit. And so if you have to borrow again from that friend is most likely or more likely to let you borrow again.
mm,
If you do
mm,
not pay back to a friend, then there's a very small chance that you'll be able to repeat the cycle. So we're
mhm,
not condoning. When I gave you that illustration, I'm not condoning or saying that that's normal for you to borrow from friends. I'm just trying to speak to where we are in this current situation of the community. Lots of us borrow money, right? And so to understand credit, you're exercising your credit. Anytime you borrow money from somebody, you're exercising your credit. If you pay them back, it's a good chance you'll be able to borrow again. If you don't pay them back, it's a great chance next time you call, you're going straight to voicemail.
or it's gonna be a fight.
Right, because you still
um,
owe. You're right.
yeah. So let's talk about. I think we got the basics right. What is credit? Credit is your credit worthiness. Um, let's talk about the FICO score. You
So for
think
those
if
who don't know, what is the FICO score?
you want me to get into that?
Yeah, you're the expertise on this. So.
Fair Isaac. All right, so
Hey, yeah.
bro, I mean, I'm not gonna break it down that crazy, but I'm gonna talk about basics, bro. Um, I want to kind of clear some misconceptions about the FICO score, right? So to understand credit is to understand um how and what is being reported. Um, Anybody who lends you money or advances you credit or merchandise, um, if they utilize your credit worthiness to evaluate you before they lent you anything, then they reserve the right to report how you pay, when you pay, and when you don't pay.
It, correct. But I want you to go back and drop a gem like you just snuck it in there. You Fair Isaac. No, tell them what the FICO score is, because that's, I guarantee you, 90% of the community does not know what FICO, the acronym, stands for. So you tried to breeze past it, but I want you to nail it home. What does
Well,
FICO score stand for?
it's the Fair Isaac Corporation. It's an index.
Yes, that's it right there. Yes, Fair
Yeah,
Isaac Corporation, FICO. Yes.
yeah,
So for everybody in the community, whatever community that you're in, we now know what the acronym for FICO is. Fair
dang, that's
Isaac
crazy.
Corporation. That's the CO, the co. Fair,
Yeah,
the Phi is Fair Isaac. The CO is corporation. So that was a gem that I guarantee you 90% of Americans did not know. So
I did not know that. Nobody knew that. Yeah.
I didn't want you to breeze past. You breeze past it, but I was like, I'm gonna let them talk. But no, we got to come back to that. So now I guarantee you, YouTube just learned something new right now, just in that term. So go ahead, do your
Y-
thing.
Yeah. So Fair Isaac, that the corporation is just a company that some years back um was asked to analyze data and well, first they were set to calculate data based on consumers. Um, and what they did is they created an algorithm based on lendability, based on payment history, based on loan amount, based on balance, based on terms. They use all the data points associated with lending. Um, they use different products, different sourcing, and they created an algorithm that other companies are able to use to evaluate the risk when they are trying to leverage money. Little do you guys know that the FICO score means so little to you, but so more to businesses. See, as a business owner or entrepreneur, we want to deal with credit worthy people because that lets us and our investors know the likeliness that we're going to get a return on the investment.
So would you say? I'm trying to understand what you're saying. So would you say it's like your FICO score is the represent your reputation that precedes you? Meaning,
Absolutely.
if I want to
Eh,
deal with so and so, my FICO score is like a buddy that's giving him the green light. Like, yeah, he good for it. You can trust him. Is that
Yeah,
what you're saying?
I- I'll say that. I'll say that. And bro, let's make it hood terms. Let's make it hood terms. If you know Lil Ronnie owe you $10, he owe Mike $40, he owe Big Nuck $20, and he don't pay nobody no money, and you Sarah, when you come, everybody then told you that Mike don't pay his money back. So if he
Hmm.
asking you for for $20, the likeliness of you getting your money back is what you should consider. That's your credit score. That's your FICO score. Okay. So that all that data, which is in this situation, the data is the terms that he had with Mike, the terms that he had with Nuck, the terms he had with whoever else he owed money with and didn't do it. That's the data that's been collected. And the company Fair Isaac Corporation, they took that data and they're letting you marry the person that he's asking for money. They're saying, okay, it don't look like he gonna pay you back, Mary. So you as Mary, the person that's gonna loan him this $20, you may be like, all right, I know you ain't pay Mike back. I don't even, but this, I know you. I know this is something that you're gonna need. And I'm looking at these other factors. You might pay me back, but since you ain't pay Mike, you ain't pay all these other people back, and I'm gonna give you a chance because this little $20 ain't gonna kill me. You gotta give me 60 back.
Hmm. Taxation. Okay,
Yeah.
so question.
Hmm.
Okay, so there's a theory going around where people say, I'll just pay cash. Well, I don't need credit. I'll just pay everything cash. I'm gonna ask you, why is understanding credit so important? Why is maintaining good credit important in today's world? Why do you think so?
Because credit is always going to be king. Because your worth goes beyond what you have. Think about that. Goes beyond what you have right now. Your worth is your ability to be profitable to somebody else. That's what credit is. If you understand that credit, um, you'll always you'll always have more access to credit because credit is not tied to your earning ability.
Right, right, right.
That's that's all cash is tied to is your earning ability. Is the exchange of your time and the resource that you're giving for that time. But your credit doesn't have a number on it. Your credit is based on what you've repeatedly done.
Well, there's a sector of people out here that feel like, um, I don't need the latest and greatest. I can live modestly.
Hmm.
Um, so why do I need credit?
Okay,
If
I'll
I'm
give you
paying
an
for
example.
cash for everything, why do I need credit?
Give me an example. Let's talk about the OG. They got all the cash in the mattress, right? All right. OG got all his life earnings in the mattress. He's never dealt with credit, right? House catch on fire. What is he worth? Nothing. It's gone. Gone in an instant.
Hold on. Hold on. What if his cash is in the bank?
If the bank goes, what is he worth? Only what they saw in the bank. Can you start over and recreate what you have with only the cash that you've accumulated? No. You need more than that. So credit is your worthiness, is your reputation. Somebody will always look at you and see an asset if your credibility is good. If I watch you every day, you get up. Let's. How can I explain it? Um, you get up and you go generate money and you pay your bills. You get up, you go generate money, you pay your bills. You get up, you go generate money, you pay your bills. Right? If I understand that and you're responsible with everything, I want you to take my money because I know you're gonna give me my money back. And most things that are attached to credit have an interest rate. That's how the country operates. That's how banks operate.
Right. Yeah.
It's
To
it's
more to your point,
lendability.
that's the society that we're living in. See, a lot of
Yeah.
people try to act like I don't need credit, but you're paying rent, right? You're paying utilities, right? You're paying a
Hmm.
car note.
Hmm.
If you default on those payments, that will affect your credit. So we're all participating in this game,
Yeah.
is what I'm saying. So people that try to fight against the credit, like I don't have to buy this. I don't, as long as you're paying NIPSCO or not NIPSCO, as long as you're paying utilities, as long as you're paying rent, because you're not owning, because they feel like they're trying to dodge the
Well,
credit. You're
well, hold
still
on, hold on.
subject to the credit rules.
Well, let's keep it a buck. Anytime you're paying something that has an interest rate associated with,
That's credit. Yeah.
somebody's profiting off of that dollar. So you feel like cash is king, cool. You see what I'm saying?
Well, not
Credit,
anything. Hold on. When you pay utilities, there's no interest attached to that, but you're
yeah,
still
but
paying something that could negatively or positively affect your credit. Is what I'm saying.
well, so again, your credit is your creditability. If I see that you have a problem paying for your utility, which is an essential living, that tells me how you're managing your lifestyle. Do you think if your utility is, $100 a month, would I loan you money to pay me $100 a month? Most people won't go in the dark before they pay a debt. That's a necessity. Your utilities are typically a necessity, right? So that's why that's considered a part of your credibility. Let's kind of break down the credit ability, and then the credit scores. And then I want to tell y'all there are multiple credit scores that are utilized based on the purchase that you're trying to make as well. We're going to get into that. So, I think we talked enough about credit. What credit is? It's your credit ability, right? Everybody hears it as this credit score, right? Um, who's scoring you? Well, what's interesting is, and this is about to change. People don't know. I think it's 27, 28. They're looking at it. But right now, there are three major credit
Credit bureaus.
reporting bureaus. When I say major, I'm saying these are the major bureaus that most companies, in terms of lending institutions, utilize and trust because they've created algorithms that are able to assess the risk of the people that they're intending to do business with in terms of lending money. Those three companies, you've probably heard of them, are Experian, Equifax, and TransUnion. Now, what people don't know, there are other secondary and tertiary credit reporting agencies, but these are the three major ones because they spend a lot of time, or a lot of resource, and a lot of money trying to analyze um, people's lendability, and they're not really analyzing it for you. I want to. Oh, what you got there?
Go ahead. I'm just
What's that, Mike?
throwing up what you said. Three major credit bureaus:
Oh, that's Central. It says Central Bankruptcy Court.
Equifax, TransUnion, and Experian. There's all the
Oh,
phone
okay.
numbers.
Oh, my fault. I didn't know. Hey, he's the editor as well, so let him do his thing. So, so so these companies, they have their own distinct algorithms, and their algorithms are proprietary to them. They look at a lot of different factors when trying to determine your credit worthiness, and they all have a score. Okay. Um, it used to be, well, it used to be just a sole algorithm for each company, and they had just a credit score. And what started happening was that credit score will determine, if a credit card company is going to approve you or not. The credit card companies, car loans, mortgages, all these companies would assess these the information from these three major bureaus about you when you apply, and based on that evaluation, they would look at and analyze and say, based on this score, what's the probability of us getting paid back in full so that we can get the return on this money that
Right.
we need for our investors. So I tell people that your credit score really isn't for you, it's for the institutions that are choosing to do business with you. But it does get you access to the things that you haven't generated enough cash to buy now. Okay. Well, I tell my people to not leverage your personal credit to purchase things.
Example: personal credit things. What are the examples?
So I know people that if they don't have enough cash for, let's say, something like furniture, right? You go to the furniture store, you want this $3,000 couch set, right? You don't have $3,000, right? Well, you should get a charge card, right? That's a credit account associated by this that's directly connected to this particular store. So the store is going to be the bank. So the store says, "Hey, ma'am, you love this couch. It's $3,000, but you don't have $3,000 now. I'll tell you what. I'll give you a charge card with $3,000, meaning that you get an open credit of $3,000 to use at this store. However, since you don't have the $3,000 today, you can pay me, hypothetically, $100 a month for 36 months. Everybody looks at that situation like, man, that's a great opportunity, right? Well, let me talk to you about how the stores profit off of that. That couch that they have in that store for $3,000, it only costs them about $500 to $600 to acquire, right? And they're selling it for $3,000. Well, because they have to wait for 3 years to get the profit that they were expecting of $2,700. Wait, how much did I say it was? Let's say the couch cost us it cost the store five
You
hundred
said
dollars just to make sure.
3,000. You said they only paid 500 for it.
Let's say 500. Yeah, so let's just say 500 for it, right? Well, the store was expecting to make 2,500 off of that, right? And they were expecting to make that the second that somebody bought it. Well, since Miss Johnson don't have the money today, we allow her to use credit in the form of that charge card for $3,000. Well, instead of getting $3,000, which is a $2,500 profit, they gonna charge Miss Johnson $600 on top of the $300 because now you're gonna pay $100 a month for 36 months.
That's a crazy interest rate. Come on, bro. You being hyperbolic. That's crazy interest.
What do you mean?
600 on top of 3 grand.
But if you're paying for 36 months, yeah, that's not abnormal. Furniture, those are high. Okay, so
I don't know. I'm
high default items like furniture, jewelry, things that when they leave,
You're right. No, you're right. Yeah, you're
yeah,
right.
the interest rate goes higher.
Because the risk is higher, so the interest rate has
The
to be
risk is
higher.
higher, so
Yeah,
yeah.
yeah.
So the company is going to make the 2,500 plus, since they waited, they're gonna make an additional $600 because they let you pay it $100 a month.
And the interest
You
is
think everything,
upfront loaded because they want to hurry up and get their money.
yeah. And the interest and the bank that takes that loan on that charge card, right? If you pay it off, that interest is running monthly. So,
Daily. Hold on. Daily, right?
well, daily. It depends on the amortization, but yeah, daily. It depends on how it's accrued. But my point of using that as an example is that that store evaluates your credit worthiness or your ability to pay that loan back based on those three bureaus that we were talking about. And they used to look at the combined the combined the scores from each of those bureaus. If you guys heard of your credit score is a scoring system that the credit bureaus give you based on your credit worthiness. The scores range from 400 to 850 is the highest that you can get. 400, is it 400 is the lowest? Is it 300?
I don't know, bro.
Fact check that for me, Mike.
All right.
Typically, the general idea has always been the higher the credit score, the more likely you are to pay back, meaning that you have better credit, you have good credit. I think good credit starts from 720. 720 to 800 is good credit. 800 and above is considered excellent credit. Anything below 720 is considered fair, and I think that goes all the way to like 560, 580, and it can vary just a little bit based on the bureau that's reporting that information and how they look at you.
Yeah, I think you're right with the 300. That's the lowest. That's crazy. Oof. Yeah, 300 to 850, like you said.
Yeah, 300 to 850.
That's crazy work.
Most Americans, bro, you'll see most Americans are between 550 and 620, and that's for a reason. I've been paying attention to credit scores for a long time, and I noticed that the algorithms are manipulated to encourage higher interest rates because people that have low credit scores, that's where the country makes the most of the money.
That's where the money is. Yeah. Oh, yeah.
If you notice, a person with a high credit score, if you offer
Can't
them
make money
interest,
off that.
they don't want interest at all.
Mm-hmm.
So they'll fight. They won't take your credit because they know somebody's going to give them 0% interest because they've proven that they can pay on time.
So the
Um,
takeaway for this, so let's just sum it up. The lower your credit score, the more you're allowing these corporations to make money off of you because they can give you higher interest rates. The higher your credit score is, the less money that they can make off you because of your credit worthiness.
hmm And there are several factors that contribute to your credit score. Um, I think people, I think that's another thing. People want to know why my score is not going up. There's a couple things.
So let's talk about it. What is it?
Um,
What is it called? Your portfolio, your credit spread mix, or
your
whatever.
credit profile or your credit
Uh
mix.
huh.
Yeah. One of the factors that contributes to your credit score is on-time payments. Um, Paying on time every month um, is, I think it's 30% of your score, 25 to 30% of your credit score. Um, that's pretty huge. That's one of the factors that you can't really mess up. Now, there are couple of other factors that you got a little bit control over, and that you can manipulate in order to show a higher credit score to improve what your credit score is at the time that it's pulled. However, on-time payments is huge. Um, Second is your mix of credit, right? Um, what is it showing? Maximize that, Mike. Let me see. Oh, it's crazy. I can't. Oh, I did. Yeah. So your payment history, that's exactly it. Your payment history is 35%, followed by your utilization rate, right? So your utilization rate is the amount of credit that has been extended to you versus how much credit you have out of what has been extended. So
Example. What's the
let me
example? Give
give
a credit card example.
let me give a credit card example. Okay. So let's say the only credit you have out, right, is $1,000 credit card, right? So you say, man, I got $1,000 credit card. You go run the credit card up. So now your credit card is at its limit, right? You don't have any more available credit. Doesn't mean that your credit is bad, right? But your utilization is going to be at 100%. So what that tells banks and other financial institutions that want to do business with you, and say, well, somebody gave this guy $1,000 worth of credit. Now he pays his bill on time, but he's running his credit to $1,000 every month. That's high risk because that means you needed that credit to probably survive. That's an indication that you're living above your means. So credit utilization, in my opinion, I try to keep that between 10 to 15%. Um, and the reason why I keep it, I'll tell you the big picture why I analyze and I keep credit at limits that I actually have is because um you want to make sure that you're always showing as lendable in case you needed more credit. We're gonna talk about that too. The next factor that is really important, but you can't control it, is your credit history. How long have you been borrowing money? How long has it been since somebody has, opened you or extended you credit? Most of us at 18 years old, we get bombarded with those credit cards, because everybody wants to sign you because they want to get you on the train, get you in debt, or get you to start paying back debt, or get you to start liking debt. So most of our credit profiles would date back to, being 18. How most banks and financial institutions look at that is that that's fairly important, but not most important in determining if the likeliness of somebody paying you back, because there's not a lot of data there for newer customers. They can't weigh that um, fairly. They can't weigh it highly, so it's only 15% of your credit score. New credit is huge. I know it only contributes to 10% of your score, but lenders get an opportunity to to look at this mix as well. That's why I try to tell people, just because your credit score is high, it's the mix of credit that certain companies
That's
will
a fact.
utilize to
Yep.
determine if they're going to lend to you.
Hmm.
So let me give you an example. Two people that both have 700 credit scores, right? Your scores are the same, and let's say they're both experienced credit scores, and this is just the credit score that this bank is using, right?
We got to break the tie. It's got to be a tiebreaker.
Well, not necessarily, but let me kind of give you an example. So let's say that we got Michelle is got 720, and all of her credit factors are the same, and April, all of her credit factors are the same, and April has been on chill mode, right? They've pretty much made the same type of purchases. They got they both got a single credit card for $1,000 limit on it. They make their payments on time, and they keep their credit card at $150 balance, no more, right? Well, let's say Michelle is trying to get a car, right? And recently, Michelle has opened up 4 new credit cards, right? So Michelle got 4 new credit cards over the last month and a half. And April, she still got the one credit card and she on time. They both want to go get a car. Their credit scores are exactly the same, 700. Well, it is quite possible for them to both look for the exact same car at the same price and have the same credit score, but Michelle won't get financed for the car. Well, it's because when you're lending, banks look at what you've done recently. They might look at Michelle and be like, "Man, she been opening up a whole lot of credit cards. Maybe she having trouble paying her bills. She seem a little risky to us." Whereas, who would I say? April, same credit score as Michelle, but April ain't been adding no credit. Her first additional credit is going to be this car loan. They'll look at her as less risky and give her the car loan because she doesn't have new credit. She hasn't been applying for credit. She doesn't have inquiries. Every time you apply for credit, and let me tell y'all this, please, please listen to me. If you're young, even if you old and don't know, your social security number is the most valuable asset you have. Do not, do not put your social security number on an application without having a copy, paper copy or a PDF copy of that application in your possession. What happens is your credit is even looked at and graded based on you inquiring. That means you're trying to get credit. When lenders see that you're looking, searching, looking, searching, you can look at them as desperate.
Red flag. Yep.
The reason why I say do not apply for any credit online unless you have access to the PDF is because in small print, those companies some of them do, most of them do, run your credit multiple times through multiple lenders trying to get you an approval. And you don't even know it. What happens is people's credit scores get reduced because of the inquiries on their credit. This often happens at a car dealership. If you're going to a car dealership, you'll fill out one credit application.
Yep.
On that credit application, all they're going to show you is the signature line. They're not going to allow you to read, or they're not going to encourage you to read through the entire application. You know that long time that you sitting in that desk while they in the back
That's because you
after
got
you
bad
signed your
credit.
name on there?
You got bad credit. If you back there that long, that means you got bad credit. You got good
No,
credit, bing,
nope, 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 nope. It's
you
a
good.
tactic for all that. Nope, it's a tactic for all that, brother. If you got bad credit, you're gonna get an approval, but they want you to sit there as long as you can because they want you to feel insecure and uncertain because they're increasing the rate. But anyway, let me go back to my point. I'll talk to you about that. We'll talk about car financing in a second.
Okay.
Absolutely. It don't work like that. It don't work like what you're thinking. People with good credit don't go to and get financed through dealers. People with good credit go to dealers with financing in place already.
There you go. I already know. I've been there, done that. Yeah.
Yeah, I don't
I go with the purchase. Give me the purchase order, please. Give me the purchase order. I
yeah,
already got the financing. Just we'll
yeah,
work out a deal and we'll go from there. But go ahead.
numbers. Yeah, it's a cash deal. But anyway, going back to what I was saying, um, yeah, car dealers will take that one application and run it by 50 banks. If those banks aren't affiliated by a specific trade name or a specific business entity, or they don't have the same EIN, every individual time your credit is ran, it comes up as an inquiry on your credit. What will happen is people will go to two or three different dealers, and I've literally seen it happen. In a week, they got 60 inquiries
That's bad
because
credit
these,
though. Tell me
huh,
that. Oh, so you telling me that same scenario works for the person that walks in there with an 800 credit score?
bro? Let me explain something to you.
Is this yes or no? You
No,
can explain whatever you want to explain.
no, bro. Car dealerships, that's the business that I'm in. They're vicious. First time buyers, right? They're gonna shop you because they want to see who's giving the most points on the back end for the rate.
Right. Yes.
Yeah, so you're gonna get
Yeah.
multiple inquiries there as well.
Not 60.
Yes, you will, bro. Let me explain
Go
something
ahead.
to you. Let me no, no, let me explain what I mean. We got to get into the different types of credit scores. Do you understand that your general FICO score is not a true indication of your ability to pay back a car loan? There's a
That's why
there's
they
a
got
vehicle
three.
auto score.
Right.
There's an auto score. There's a mortgage score. There's a credit card score.
And the consumer score. Yeah.
Yeah, well, your consumer score. There's four
Well, like
different
a personal,
FICOs.
like a. Go ahead. Go ahead. I'm listening. Go ahead.
Yeah, there are four different FICO scores.
Hmm.
There's FICO 6, 7, 9, FICO 8
7 point.
is
Yeah.
yeah, bro. This is stuff that y'all sending stuff in the group chat. I'm on watching and waiting for them to try to change. They just added those pay laters to your credit, so be a pay
Hmm.
be careful with that stuff. Telling my daughter about that. But my point of going back to the point that I was making is yeah, be very careful, be very protective over your social security number. Um, you always want to go lender direct. Don't let anybody run your credit if you don't know who they're running your credit through.
That's a
Um,
fact.
yeah, you should always know
You should
what
know
your
what your
credit
score
score
is.
is
Thank you.
with each bureau. What I tell people is this: before you get into a credit transaction, ask them what bureau, even the bank, if you're dealing with the bank or credit union,
That's yep. That's what I do.
what bureau are you utilizing to
Yep.
evaluate my credit? Because
Because each
every
institution is different. You're right.
yeah, each bureau is different, and bureaus are just companies; they're just reporting agencies. Um, if you notice, the reason why there are three different credit scores is because the the way that lenders report to the bureaus can be different for each lender. There are some lenders that they don't want because they don't want to link up with Experian because Experian, from a consumer standpoint, they require access to your books, to your credit history. I mean, not to your books, but all your accounting information has to sync with them in the event somebody tries to dispute. Instead of them holding the record, they can have access to the record with you so they can beat the dispute because they want to keep the algorithm going. But that money goes back to the business. That money comes out of the split or the percentage that the business is paying to do business with them as well. So there's a lot. But my point of saying that is your credit score can be different based on who your lender is utilizing to evaluate your credit. Meaning, like if you go through Wells Fargo, right? Wells Fargo might only use TransUnion, their scores for their evaluatory purposes. And I've seen certain banks use TransUnion scores for their credit card products, but their mortgage scores go through Experian. So, as a consumer, it's important that we know this so that we can, because you can all pull your credit scores. Tell everybody get this account. Go to annual credit report, creditreport.com. If you go there, you can sign up for absolutely free, and you'll get access free copy of your own personal credit report so that you know where you stand with each and every bureau. Now, they are going to try to sell you memberships and sell you things like that. You don't have to. You're entitled to access for free, and then you'll get one free credit report every year. So you always should know what you're doing. I encourage us, be protectful of your social security number. Find out, what banks your information is going to be ran through, and find out which of the three credit bureau reporting agencies this company is going to utilize in order to make their credit decision.
I
You
agree.
got some questions on that?
No, I want to add on, and don't fight me on this because I don't want to go down a rabbit hole. But to your point, you do need to know you do need to know your score from all three agencies. And I would just add on to that, I would suggest downloading the apps, just like y'all download Facebook, Instagram, TikTok, and all of that. Download the Experian app, download the Credit Karma app. Credit Karma gives you
Uh,
TransUnion, and it gives you, what is it?
no, let me say this.
Go ahead.
All right. So
He
yes,
pushed back anyway. He pushed back.
yeah,
Okay.
I got to push back, bro, because Credit Karma is not issuing you a FICO score. It's not a Fair Isaac score. They have their own algorithm that they believe mirrors those other two entities.
Mm-hmm.
The reason why you don't see it on Equifax, I don't think it's Equifax
Equifax,
that
that's the
won't
one.
be.
Equifax,
Or
TransUnion, and Equifax. Go ahead. Mm-hmm.
no, I don't think it's Equifax on Credit Karma or no.
Yes, that's why I said Equifax. Yeah, it's TransUnion and Equifax. Experian has their own app.
Yeah, yeah. Experian won't allow them to report their name on their credit scores because Credit Karma is not always accurate.
Mm-hmm.
What Credit Karma is doing is it's just using advertising money to support its own algorithm and access to public data. That's why your Credit Karma score can differ from your actual FICO scores.
Yes,
Sometimes it's close. They want it to be close, but no lender will ever look at your Credit Karma score and make a lending decision based upon that.
right.
None. So, like Mike said, I definitely think it's important. Everybody should download the Experian app. I have it. I stay in it, and understand those basic fundamentals about credit. And I think that the next stage is that I want to tell people why you shouldn't use credit the way that we've been using it.
Okay,
Um,
so just hold that. So we're gonna transition now. So we've discussed what credit is and understanding credit and what the credit bureaus stand for and what they look for. Now we're gonna pivot to the usage of credit.
yeah, personal.
So right, so we understand what credit is. Everybody, we got it down. Right, it took
Mm,
50 minutes, but we got there. So we
shut up.
understand what credit is. So now we're gonna talk about the usage of it and the non-usage of it. And you were just getting ready to point on some as far as
Yeah.
what not to do.
So I think that most consumers, unless educated otherwise, thinks credit is an opportunity to buy what I can't afford now. uh,
Like layaway. Yeah.
nah, layaway you can't take it home. until it's paid for.
I'm saying it's similar. Right. It's a better form of layaway. It's better than layaway, like you said. Right. I'm making
There's no
payments on it,
lay.
except they
There's
don't
no
make
lay or away.
or away, but it
Yeah, so
still
it's not
replaces
layaway.
layaway. Yeah.
Um, so but no, it's not that, y'all. That's our issue, man. We want to have credit so we can get the stuff that we can't pay for now. No. I tell you, that's the worst way to utilize credit. I will say, um, it does you well to build good credit habits. Um, I would say this. Um, always say first, right? What you want to use credit for is to establish a positive payment reputation. That's the first thing that you should want to use credit for, to show somebody, which is the world, that you are able to pay what you borrowed. I tell people, no matter how old you are, your first form of credit should be a secured credit card. Let me explain. What I would inform people is whatever you make from your check bi-weekly, take 25% of that and open a secured credit card at your bank. A secured credit card will not affect your personal credit in the forms of an inquiry. It's because you are securing the card with your payroll money.
When you say bi-weekly income, are you talking about net income or gross?
It doesn't matter. Whatever you, if you
Okay.
25% of whatever you take home, that's fine.
So net. Okay.
The reason why I say 25% is because typically we're gonna blow 25% and we try to include that in our disposable income. We try to justify it as disposable. So if you make $1,000 on your check in 2 weeks, hypothetically, take $250 out of it and put that in the credit card. What's gonna happen is now you have a credit reporting. You have a limit of $250. That $250 didn't come from a bank. It came from you. Every month, you're going to have to pay a portion of that money back. Well, instead of paying the bank that money and interest on top of that money, which can be 28% in some situations, you're going to pay yourself. And you're going to pay it consistently. And you're going to get good credit from using your own money. So there's no risk to you. You're going to spend the money anyway. You're going to get paid in 2 weeks. You're just going to pay yourself back. And those payments are going to report to the credit bureau because it is considered a secured credit card.
I did that when before I bought this house. I was trying to build my credit up, and I did a collateral loan. I went to the credit union and I put up $1,000 in my savings account, and then they loaned me $1,000.
$1,000.
And I didn't even touch the money. I just made the payments off the money that they gave me to build up the credit. So basically, that's what you're saying. Get the credit. Use your money to establish credit worthiness, so that you can leverage more credit in the future. But you got to start somewhere.
Yeah. You want me to tell you? I could tell you a quick equation. I think I taught you this before about how to get good credit instantly with 3 different banks. Never tell you that?
All
right.
You got to tell me.
Let me throw the jewels. Say you got $1,000, period. Right? You take $1,000. You go. You sit in a bank. Let's call it. Let's say Navy Federal Credit Union. All right. You got $1,000 that you're able to sit in the bank in a savings account. Right? You can even do an interest-bearing savings account. If you let that money sit in the bank for at least 60 days, the bank is looking at that money as a secure investment because they're utilizing that money, that actual money you put in there, to ship out and give and invest with other members. Well, what you want to do is, because that $1,000 is going to sit there, what you want to do is you want to go to that bank, Navy Federal, after 60 days and say, hey, I want to take out a loan for $1,000. Well, because you have collateral of $1,000 in that bank already, they said, well, sure, this is the collateral. You got it here. I'm gonna loan you $1,000, right? So now you have your same $1,000, right? You got the cash back in your pocket. They loaned you the 1,000, right? Take that 1,000, put it in Chase, right? Now you got $1,000 sitting in Chase,
Rinse and repeat.
right?
Yeah. Yep.
60 days, take that $1,000 from Chase. You go to Chase, say, hey, can I borrow $1,000? Right? Take that same 1,000, go to BOA. So now at this point, that $1,000 is sitting, and
You
it's
leveraged it 3 times. Yeah.
you've leveraged it
Or
3
2 times.
times.
Yeah.
Now you're in debt for $3,000 technically from that $1,000, but the third bank gave you cash, right? That $1,000 cash that you got, you keep it. You go back to Navy Federal, say, hey, I want to open up a CD. I want to open up $1,000 6-month certificate of deposit. They're gonna tell you, okay, well, you're gonna leverage it. Now you got $1,000 to leverage it. Boom. You put that CD in there. You put the $1,000 in there. You do that with the other 2 banks, same exact way. Now you took $1,000 one time and you turned it to an investment, a CD, interest gaining CD, right? You make the payments on the $1,000 loans that you've had, and probably be $30, $40 a month. And in 6 months, you've established a payment history with 3 different lending institutions. That's flawless, right? And you have CDs with those companies. Typically, what all 3 of those banks will do is, if you have two or more products with them, and you have a flawless payment history, they will increase your creditability by 500%. So after doing that, making those payments, those small payments on time for each bank, you'll probably be making $100 a month total, $35, $40 each account. Now you got 6 months of payments on that for 3 different banks. You can go to each of those banks and ask them for a loan of from $5,000 to $10,000, all from the $1,000 that you started with. That's because you have great banking relationship. You have a mix of products, right? You have a savings account of $1,000 in each bank. You're tied to the bank. You have good banking habits.
Right.
That's how you turn $1,000 into
And a
over
10.
almost $30,000.
Mm-hmm.
Keep doing it. The last bank that you take, you're always gonna have cash. Utilize that cash to pay the monthly payments from the other 2 institutions. Don't pocket the cash.
That's the
Pay
key.
one off.
Don't pocket. You got to reinvest. You got to keep
No,
leveraging.
but it's
You got to,
again, it's your money anyway. you're
regardless,
gonna
don't pocket the
you're gonna
cash.
blow it.
Don't stop.
Yeah.
Yeah.
So what happens is, if you do that over 6 months, you get 5x return, 5 to 10x return. So you could probably get about, with 3 products, and at definitely Navy Federal. Chase is a little stingy. Make sure you have an active checking and savings account with these companies as well, because that's just showing that you're doing business with them consistently. And you'll be able to walk in without them even thinking twice. And don't even care what your credit is, because your credit mix is not even important. But they'll give
Right.
you
It's a collateral loan.
yeah, they'll give you $10,000 worth of cash.
All right. So be careful. Be careful, y'all. If we end up on pocket watching with JT,
Tell them to come out at your boy.
it's gonna be his fault. This, I'm assuming this is legit. I'm listening.
It is
I'm chopping
legitimate.
it up. It
It's
sounds
legitimate.
legitimate, but I'm just saying,
Yeah,
pocket,
it's
hey,
legitimate.
pocket
It's
watching with JT go. I'm gonna let him.
tell him to come holler at you. Holler at your boy.
I'm
Say
gonna let him
something.
stamp it.
And this is not like a hustle or a play. What you're doing is you're establishing a banking base, meaning that you have a checking account, you have a savings account, right? Now you have money in the savings account. Then you've taken a loan product out. Now you have a certificate of deposit that's gaining
It's a
interest.
credit mix.
That's
Yeah,
five that's five lines of business that you have with these lending institutions. They want to do business with you because their investors are hoping that you do business with them because they want to return on their money.
right.
Just like you want to return on your CD, that's how the bank is paying you back from other members that are being responsible like yourself.
So credit is big business. We all working together. It's a partnership.
Yeah, credit is
We
big
both
business.
get a return on our investment.
Tell JT come holler at your boy, bro.
All right. So next question:
Hmm?
how do you repair your credit? Let's say, let's say somebody's watching this and their credit score is 515 or 498, and they want to rebound.
All right. So I
Let's
think
go back
before
to
we,
let's go back to. Go ahead. I'm gonna
I
share the
think,
screen.
yeah, I think before we discuss repair, we need to know why people would want a high credit score. If I gave you, I used to start this. I used to start my conversations when I did financial literacy, just talking to people like, if I gave you an 850 credit score tomorrow, what would you do?
What would you do with it? Yeah.
Nobody knows, right? Well, I tell people that again, credit is not the opportunity to go buy that you can't afford and pay it back in small increments. That's not what I would recommend to use personal credit for.
Okay.
What you want to use personal credit for is to build your credit worthiness so it access you to funds with the lowest interest rate. Okay. Um, you save money long term if your credit's good. You see these people getting 0% interest on vehicles, 1.9% interest on vehicles. That's because of their good credit history. So when you need to make a larger purchase, the amount that you're paying back, you're not in as much debt.
Yeah.
Not the fact that you're buying a depreciating asset, but I mean a depreciating item, but you reduce um, your negative debt. And that's what you want to have in your life, negative debt, right? Um, even with housing, your home purchase, your interest rate is determined by your credit score, by your credit worthiness. So, um, for the just the general consumer, um, having good credit is important because it allows them to make the most expensive purchases in their life, which are your car, your house, and have as little possible debt as it is to have with those purchases. Case in point, two people can go get mortgages, and let's say they're buying a $300,000 condo, right? A person with excellent credit, in addition to their lending process, might be a lot easier, a lot smoother, less documentation. Um, but let's say this person has an 800 credit score, and we're just using the score itself. We'll get into the different scores later, but let's just say they have an 800 credit score. And there's another family that's, you know, working their butt off, trying to figure it out. Um, they get approved for a mortgage and they get approved for the same $300,000. Now, let me kind of explain mortgages just a little bit and we'll get into those conversations later. But the reason why I'm using mortgages is because mortgages, the amount of your lendability in terms of mortgage are based on several factors. One of those primary factors is called your debt to income ratio, and that's again if we're using FHA loan, which is backed by the federal government. So, two people of similar income and debt will qualify for a similar mortgage amount. Typically, what happens is the person with the better credit, they get a better interest rate. So the person that has that 800 credit score, as opposed to the person who has that minimum qualifying score, I think it's 570, right?
Right.
You'll both be able to get approved for a mortgage, but that 570
He's
will
got to pay
get you
back
into
more.
that $300,000 house because you guys both make the same amount. But the interest rate on that 570 might cost you 2.5 points.
Yep.
What I mean is this: two people make the same amount of money, they qualify for the same house. Credit worthiness scores are different. The person with the 800 credit score is going to get the prime rate, which I think right now is 6%, right? So that 6% may make their monthly payments for that $300,000 house at $1,800, right? That other couple that's at the 570, because they're at the 570, they qualify for a mortgage, but they're getting charged 2 points for that, right? So they're at 8% for that house at 3,000 at $300,000.
2,400.
So now, no, so their mortgage on that same house is 2,600, 2,800, right?
8 times 3 is
Because
24. How'd you go from 26 to 28?
because 2 points, 2% in an amortized loan over 30 years, and you got to consider other factors, right? Origination costs and things like that. Those risks are calculated into that loan.
That's a fact.
So
Yeah, that's a
what
fact.
may happen is two people that make the same amount of money can't get into the same house or the same neighborhood because that person who that $300,000 house is only going to cost them $1,800 a month. Their debt to income allows them to pay for that house. That other person, because they're at 8%, their debt to
Disqualifies them.
income won't let
That,
them get
yeah,
that house.
yeah.
So what happens is two people making the same money, that person that's able to pay, because all you can pay is $1,800 based on your debt to income, you may only be able to get $175,000 house now. That's why it's important. It's so funny, man. You could be in the same neighborhood as somebody.
And they hurt.
Your house look just like theirs.
Yep.
You wonder why they stress free, and you house broke
And you struggling,
because
right? Yeah.
because you paying $5,000 a month
Hmm.
for this $300,000 house, and your neighbor got it at 3.9% interest rate.
So
And
back
that
to the
man,
original question. Let's say I work at I'm a forklift operator for Central Transport, right?
mhm, mhm.
My credit score is 590, and I want to buy a crib. So I just got a new job. Hold on, because you got to increase your income first. So I got a new job. I didn't upgrade it to now I'm driving the trucks. I'm not unloading them. I'm driving the trucks now. But my credit score is still 590, and I've got these aspirations to buy a house. What's my first point of action?
Okay, you want me to stay within the box, or you want me to tell you what you really should do if you're at a 590?
Would you file bankruptcy? Go ahead.
No,
What? I don't
hell
know.
no.
Answer how you want to answer it. I don't know.
All right.
Give us the
So now,
game. Give us the game.
look, now I'm about to teach you.
You about to teach them. The average
That's
person
right.
is running around here with a 580, 600 credit score. So we're trying to get them to the next level. How do you?
Okay.
They got the job now. Now they need the credit.
Okay. Nope. So let me tell you this. Um, it's my opinion, but I think it's great advice, guys and gals. Um, the moment that you can qualify for a house and you got a steady income, I don't care if you at a 590. Go get a mortgage. Listen and listen closely. The first piece of
Refinance.
property, nope,
Hmm.
nope. The first piece of property that you should buy is a multi-unit home, at least a two
Hmm.
unit.
That ain't gonna do it.
FHA will get you into that loan. They have down payment assistance programs.
Yes, they do.
You want to move into a two unit and don't even worry about the interest rate. Just get in at whatever you can afford because you're going to rent the other unit out. It becomes your first investment. I believe everybody's first mortgage should be an investment. So if you got that 590, please don't use that for your primary residence because that interest rate is not going to be
Because you
good.
got to pay it, right? Because you have to pay it
You got
if
to
you
pay it
use it
back.
for a primary, right?
Yeah. What I tell people is, um, I know JT gonna be watching. Let me make sure I speak this properly.
Yeah, say it right. Because we got nothing but
Um,
respect for JT, so let's get it right.
yeah, yeah. Um, if your initial purchase with a FHA loan, and I have to look at the specific guidelines. You have to be owner occupied for a year,
For a
I
year.
believe. It
Hmm.
may be 2 years now.
No, it's a year
Well,
unless they changed it.
unless they changed it. I'm not telling anybody to circumvent the system. I'm saying if you're trying to get a path to home ownership, buy you a multi-unit because FHA will allow you to buy up to 2 units under the FHA guidelines and certain down payment assistance programs. Once you get into that unit and you rent out the second unit, what it's doing is it's helping you pay down that mortgage by
Right.
providing somebody else with secure housing. Most of the time, the way you structure it and how you purchase that second piece of rent for that second unit of that duplex or townhome, that typically can cover your entire mortgage, meaning that you have an opportunity to own a home and somebody else is paying your mortgage now. Somebody else is paying that higher interest. If that's the case, you control the market. You control what you're renting your place out for.
So you
Yes, you will
telling
be a
me?
landlord.
So you telling me anybody with a 590 credit score that's living down bad in the hood can turn it around simply by buying a duplex or a triplex? And
Absolutely,
y'all heard that right?
absolutely.
Y'all heard that
Turn it
right?
all, turn it all the way around.
Pay
Listen,
attention.
listen. I don't. We don't want to get into politic talk, but if you're trying to get into home ownership, this is a great time. There are $0 down payment assistance programs. You can go buy a house with absolutely no money down and no closing costs
Yep.
and a 590 credit score. Now, if you're trying to go get Trump Towers and you're trying to get 4,000 square feet, you might want to get yourself together a little bit first.
Let me just add this. On the down payment assistance programs, it's going to be a lien on the property because they're giving nothing is free. So just so you know, not saying that it should affect anything, but just so you know, there's going to be a lien on the property and you have to satisfy that lien. But who cares? Because if you got uh, tenants that will satisfy the loan, you'll make it past the terms of the lien, and the lien will drop off. So, but I just want to
Yeah,
let that be known.
yeah, and there are terms to the DPA, um, and they're all different. So all of them don't latch on as a lien on the deed all the time. It depends on what program. So yeah, but
Mhm.
that's not, and like Mike is saying, that's not a bad thing.
No, it's not a
The
bad thing.
goal is, guys, the goal is to get into the only thing in your life that you're gonna purchase that it's guaranteed to be worth more in 10 years than what you're paying for it now. Never in a 10-year plan have the housing market completely continue to depreciate. There are falls in the market where the market stands still and some houses lose their value from the most recent values. But over a 10-year period, there's never been a time that you're paying more for a house than you did 10 years ago. So houses typically build equity. And in addition to that, unless you bought the house at a stupid price, or you bought the house in a neighborhood that in 10 years it fell off the map, um, there's opportunity for you to maneuver within a house so that you can mitigate any money that you would actually lose. The,
Question to you:
the yeah.
how available are multi units? Because I've talked to a lot of guys that do the house flipping and the landlord, and they're now buying houses and breaking them up into rooms
Oh, that's
because
what
the
I do.
multi units are not available. So
They're available. Multi units are available. I'm buying a. We just looked at one in Tempe, single family house. We're turning them into 6 rooms. Um, and we rent it because, well, so now we got. Are we talking from an investment standpoint, or are we talking back to individual buyers? I got to make sure I got the right hat on.
or individual. You just said if you got a 590, you get a duplex, triplex, whatever. But what if it's not available? Can you do the single
It
family
is.
home and break it down?
It is. You gotta just keep looking.
Okay.
So you gotta be like Mike. I don't want to get into the conversation of okay, now you got somebody else living in your house. You're in your rooms out. Like I mean, you could do a lot, bro. I mean, but that's more investment side. I want them to understand
Oh, okay.
to get to that initial home purchase, you can do it. And I'm telling everybody, get into the house first. In a year of paying a mortgage off, and with the cost of living going, I think we're at 3.5, 4% per year. I think it was 6% at one point, the cost of living expended, right? That means housing values are going to go up typically with that. So in a year or 2 years, now you have equity in your home. If you
Okay.
satisfy,
I'm saying it's not an investing. You can buy a home and rent out the rooms, right? You could do the same as if you got a duplex. You could buy a single family home, right? And
I
treat
mean,
it the same way.
you can do anything, but I wouldn't do that.
Suggesting that, yeah.
I'm not suggesting that because I don't think most people want to buy a house and live with somebody, brother.
There you go with that brother.
I gotta say it, bro. That's
I'm
just
getting
brother.
triggered. I'm getting triggered.
No,
No,
that's
I'm
my
just
word.
kidding.
That's my word. But yeah, you can, bro. You can find a duplex or a townhome anywhere,
So you saying it's
anywhere.
readily available? That's all I'm asking for the crowd.
Absolutely.
I'm asking for
Your
the
book
crowd.
says, "If you ask, you shall
I'm
receive."
asking for the crowd. Don't bring my book in it. Don't make it personal. See what I'm saying? You see what you do?
What?
I'm
I
acting as
can't
a
use the
YouTube
money.
crowd. I'm acting as a YouTube audience, and I'm asking all the questions that I think they would ask. And you're trying to make
Okay.
it personal.
Okay. He try to have y'all live with folks.
No, I'm saying, what's the alternative? So you're saying anybody can get a duplex? They're
Yeah.
all just here.
Yeah. And multi
Just gotta
units
go get
everywhere,
it.
bro. And
Okay.
multi units everywhere.
Multi
Every
units
city.
everywhere. Y'all heard that, right? So there's no excuse. If you got a
Yeah, that's
590 score, stop trying to buy a house. Stop trying to buy a single family house. Get the multi unit. Use your tenants to pay your rent, to pay the mortgage off or whatever. Leverage that and then move forward.
hmm And what I want to tell you is this. The example started with a 590 credit score, and we know the 590 credit score, it will get you lendable, right?
Yeah,
Meaning that you qualify
predatory.
for a
Yeah,
mortgage.
yeah, you get in there.
Um, Not predatory. Predatory lending is not available anymore, brother.
Yeah, all right.
Ain't no, we not playing those games no more. I learned that in '03. Think I was trying to sell you one of my buildings. I needed 500 credit score in the post,
Right.
520 in the post. That's all we need right now. No docs.
You
But no,
said
predatory
03?
lending.
No, that was like 05, 05. Yeah,
Oh
yeah.
five, five, yeah,
He was trying to leverage my credit score. I'm like,
I
yo,
was
like
trying to
this
tell you,
nigga
I can
burn
get you.
up.
I can get you.
He trying to leverage me. He's like, yo.
I mean, bro, you only all you gotta do is be breathing. You breathing? breathing
Yeah.
and with a job. You breathing in at Westgate? I got you. Here, buy this house.
Mm.
But yeah, man. The and going back to credit, like you know, the the idea of having a higher credit score is because for those high value items, um, you're protecting yourself from the higher interest rate and the higher debt ratios. That's the purpose of having a more favorable credit score.
I think ownership is the new working class. We're gonna have a whole nother show about this. I don't want to go down a rabbit hole,
No,
but
get into that. No, get into that. What you saying?
ownership is the new working class.
What does that mean, Mike?
If we push people to own, you're just the tallest midget in the room. Let me explain. The economy is set up in order to succeed, you have to reinvest. You can't just skate by with a job and like back in the day, you just have a job, retire after 40 years and cash out, get your pension and your social. No, 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 no. They got it set up to where if you want to thrive, you're going to have to be an owner of some type. You can't just be a worker. So ownership is the new working class.
Is it?
It is. Because they're forcing you to reinvest in order to live comfortably. So you reinvesting, you're not financially free from anything. You're just in another realm of a video game. All right, you off of level 1. Now you're on level 2. You still getting pimped.
So talk to me. When has it ever been different?
I didn't say it was different.
You said the new.
I'm saying, with the black community 400 years behind, right? Just like landlords and owners, that's old. With black people, the black community, we're just now. Oh yeah, ownership, landlord, multi-unit. That's 40 years old. We're late to the party. We're late to the party. The multi-unit, the same things you're talking about, been in play for decades. I'm just saying. So it's just another level of working class. You just have more leverage. That's the word we keep using. Leverage. Not freedom. No, just leverage. Comfort. I'm using somebody else's money to make more money. You're a worker. You're still a worker. You're still doing the leg work. You're still hustling and bustling and doing cartwheels and backflips. It just looks different. It's not financial freedom. It's just leverage. That's what we keep saying. Leverage. I'm not downing it. I'm not speaking against it. I'm just calling the thing a thing.
I think financial freedom is just subjective. A marketing term. No, it's a marketing term. It doesn't mean anything.
Okay. Again, I'm not against what you're talking about. I'm just calling the thing a thing. Unless I'm Rockefeller or I'm BlackRock or I'm one of them, bro. We all. Hey.
Nah, bro.
We all in the same pot.
I disagree.
No different than as if I was no different if I was on a sandwich station at Burger King or the CEO at Meta. We still workers. It's just I just get paid more than you. And my job is easier than yours.
I think the way you look at it is wrong, Mike. I don't think you're considering the most important thing.
Calling the thing a thing is not considering the most important thing.
All right, so I'll tell you what my perspective is.
Mm-hmm.
The thing that I value more than anything is time. So I leverage assets to control my time. I don't.
Okay, what are you doing with that saved time?
Whatever the hell I want to.
Which is nothing.
No, I do what I want to do. Period.
How much time are you saving? Hold on, before you get on your soapbox.
You can't save time. Saving? You can't save time, brother.
Yes, you are. You just compared it. You just said what I'm doing helps me leverage time. So if you were working a corporate job, how much time are you saving versus what you're doing now? 6 hours, 2 hours, 5 hours?
So I think my financial transactions, I told you a long time ago, I stopped chasing money. Remember? Because when you get there, you're like, "Ah." So what I had to do was disconnect from that urge, and I started loving the fact that if I leverage what I've done, I get to control my time.
And I'm
Period.
just asking you, how much time are you saving? I'm asking you to quantify what you're
I can't
saying.
I can't quantify it, but I
So
know
if you don't know how much time you're saving, are you saving time?
absolutely because I get to do what I want to do, not what I have to do.
Or you talking about time on the job? I'm talking about free time.
My time is never nobody's time is free, but the choice
Come on,
of
Cat.
what you're doing with your time is what everybody's looking for, bro. Some people, let me tell you my thought process. As a consumer and a person who operates um let's just say W2, right? It seems like the path that's put out for them is, hey, work, 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 work. Do what I need you to do until you're 65 or 67 now. Then,
Right.
whatever you want to do with your time, you decide what you want to do with your time then. At that point, most of us have 7 to 10 years, maybe 15
If
years
that,
max, maybe
if
15
if they
years
make it,
max,
bro.
right?
If that,
So, how my process is okay, I can chase the money, but it takes time to get the money. To do what? When I realized that the doing part, there's not this big celebratory moment of, oh, I can do things. Well, I got to my free time or got control of my time well before I turned 65. I've been controlling my time since I was, let me shut up.
since you was 23, whatever, but you still
Nah,
in the
I'm
game.
not gonna say 23. I'm not gonna say 23. Still
However,
in what game?
whatever age you gonna throw out there, you still building up equity. You're still working, just like you're still working like everybody else. You have not reached the promised land.
There's no
Because you
promise
just
land,
said
Mike.
six, you said 65. Yes, you set the promise line. You said I'll set myself up to where I'm not blah 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 to 65. So
I,
that's
I,
the end goal. But you're still in
no,
the process of building equity to make sure that you
no.
don't have to. Go ahead,
To make sure I don't have to what?
make it to 65. Whatever the end goal that you said was
I
the
may
end
not
goal.
make it to 65.
You said what?
I may not make it to 65, but
You talking about
controlling
living
my
or just
time.
working?
Who gonna work to 65? Who the hell gonna work that
I'm
long?
asking you what you talked about. I'm just asking. Were you talking about living to 65 or working to 65?
I, bro, I don't.
I'm just trying to understand what you're saying when you said what you said. That's all. I'm not trying to pin you in the corner. You said what
Yeah,
you said. I'm just looking for context on what you said. Are you talking about working to 65 or living to 65? That's all I was
I'm saying.
asking.
I'm saying. The goal for me was to be able to have control of my time, and if I could create a system that gives me the flexibility to do the things that are important to me
Mhm.
and evaluate everything else, I love that about my life. I love that I can choose to do what I want to do. It's not a necessity. I have enough intellect and I've, enough created enough opportunities for myself that the things that I do, I'm choosing to do. Do I have to do them? No, but it's a choice. And that means chasing a Huge opportunity. Do I have? If it's gonna take more energy or more time or put me in, like, I'll give you an example. True example. Um, there's an opportunity for me to capitalize on something big, right? Well, that something big would have been very substantial, darn near guaranteed. I gotta miss my daughter's senior year. I gotta not be there to take my son to get his permit. I gotta not be able to support, my wife if XYZ happens. It ain't worth it to me. You see what I'm saying? I can choose that. If there's a job that comes around and the job say, hey, I'll let you work my job, but you can't work. You got to work on Saturdays. You got to put in 12 hours a day. You got to be on call. We're going to pay you a whole lot of money. Nah.
We're gonna say this conversation for off the camera because I don't want to say too much.
Yeah, I'm just saying, bro.
Yeah.
The end goal is for me was just be able to control my time, bro. I hate the feeling that it wasn't like that.
I agree.
I think credit.
Time is
Understanding credit is huge, right? Because guess what? If you need to go recreate, and we'll get into that, how I think credit should be used, your credibility should be added to your lendability, which allows you to leverage their money for you to create your income opportunities. So you're not risking anything that you've profited. We'll talk about that though.
Right. So back to the original question. How does a person with a 590 credit score improve his credit? Yes, you said go buy a duplex, multi-unit, but buying a multi-unit and having people pay the mortgage off, that itself increases your credit. Is that what you're saying?
Absolutely.
I'm just trying to connect the dots. Go ahead.
The second you get a mortgage on your credit, you can expect 60 to 80% increase depending on the other things that are mixed.
Yep.
Yeah. Because you've told somebody, hey, you purchased something that's going to appreciate. Right. Everybody like, hold on, let's give him something. He gonna need some lawnmowers. He gonna need a roof. He gonna need,
once you approve for a mortgage, no matter how high the interest rate is, once it hits your credit report, it's saying somebody trusted you enough to loan you $400,000.
Yeah,
which would in fact boost your credit score.
And what it's saying, what it's saying to lenders and other people that are interested in lending you money is saying that this person, and let me say this, y'all, qualifying for a mortgage is one thing, but the process that you have to go through to get it is very tedious. That's why the increase is there. A lot of people fall off in the process. A lot of people can't meet the conditions.
A lot of
can't make it to closing. So the fact that you've got through those things and you have a mortgage on your credit increases your lendability. And I think we'll talk about this in another show about the 3 different types of credit scores. There's a reason why when you pull your FICO, you have a what you think is a good credit score, say 700 plus, right? 720 plus. You still can't lease a luxury vehicle. There's a little method to the madness there. We'll talk about that. Then we'll talk about why certain people can't get access to high limit credit cards, no matter what your credit score is, because there's a credit algorithm for each. Well, for the major lending products. It's so funny that people that have good credit but high medical debt, they tend not to be able to get into luxury cars.
Oh, okay. All right. Well, we've been up here for an hour and a half. So we're going to summarize it. We're going to summarize the whole discussion. We talked about understanding credit. We identified what credit is. Ken talked about ways that you could use what is it, secure credit cards and collateral loans to build your
Establish
credit,
and build your credit.
establish and build your credit. And Ken talked about what you can do once you've done that.
Credit
Don't look
mix.
for a personal, right, credit mix, but don't look for a personal asset as far as a single family house. He told you to look for a, I think, multi unit or whatever.
Multi-unit.
But we're
We
gonna
can't
let you
see your
some.
face.
We're gonna, huh?
I couldn't see your face. You had your hand was
Oh,
like this.
right, right. Hey, 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 hey. So we're gonna let you just summarize it before we end it and we give our final thoughts. Go ahead.
Yeah. Just to piggyback off what Mike said, I think we discussed what a FICO is, what where it came from. And again, it's the bank's assessment of your credit worthiness. We talk about the factors that make up your credit worthiness, and how that's evaluated. And it's evaluated in terms of the score. We talked about the three companies that that give you a score, meaning three companies that will evaluate your credit, and that most lendings, large lending institutions will utilize. They'll pull your score from these three companies. That's Experian, Equifax, and TransUnion. Um, we talked about in that credit mix, some very specific things that you should know and understand about that credit mix. We talked about payment history. We talked about credit history. We talked about mix of credit. We even talked about inquiries, and we talked about new credit. Um, definitely, definitely. I tell y'all this again, um, especially with these car loans and furniture companies. Well, not so much furniture companies. I think they've changed. I think it's up front, but your social security number is the gateway to all of this. It is your identity, is your digital identity. Um, do not sign that number to anywhere that you don't know exactly who and how many other banks are going to be able to view your information, because each time your credit is ran, it shows up as an inquiry, and multiple inquiries can decrease your credit score, and it also um, can scare other lenders from lending you money because it can have you appear to be desperate.
Right,
That was a
right.
lesson
For
that
real,
we
for
talked
real.
about.
Yep, yep.
Yeah. In addition to that, we talked about what to do with a high credit score, why you want a high credit score. And I talked to you about the two most expensive purchases that you'll make in your life. There'll be a mortgage, and I talked to you about the advantages of having a higher credit score for that, and also a car loan. Um, you want access to the lowest interest rates as possible so that you can get more for your money. Um, I gave an example from a mortgage standpoint, from a car standpoint. I mean, you know, your cars, the banks typically will lend you what you can pay for monthly based on your income. Well, what that number turns out to be can be greatly different based on the term of the loan and the interest rate of the loan. So, $400 a month uh, for $8,000 car at 28% interest for
Crazy work.
84 months.
That's crazy
that's
work.
that's
Woo.
$400. And all you gonna get, you might get a Chevy Malibu, a 2012 Chevy Malibu.
I was finna say, yeah, there you go. Yeah, 13 years at least. Yeah.
Whereas that
You say
same four hundred
8,000.
dollars a month, that same $400 a month gets you a nice lease on a
Yep.
on a on a let's just say a high,
A brand new
uh,
lease.
let's say a nicer car. Just put it like that.
Mm-mm.
So just understand that personal credit. It's all going to boil down to those high value purchases, and that you get the most favorable terms and rates so that you can save as much as your income as possible, so that you can eventually create disposable income that you can choose to invest in.
And just to piggyback on that, what we talked about the credit score and how it's calculated, the two biggest factors as we see on the screen is your payment history is 35%, and your utilization, your credit utilization is 30%. Everything else is 15, 10, and 10. So if you don't pay
Let
your
me.
bills on time, you hit. If you're using too much credit, you hit. So you need to adjust those two things to positively affect your credit quicker.
Yeah, and to piggyback on that, you can't change your payment history, right?
Nope.
But you can always change your utilization because that's what you can pay back. Now, let me tell you what lenders have done and what is built into the algorithm. Payment history is one thing. However, their trending history has been built into all of the algorithms. Meaning that if your last missed payment was 3 years ago, it doesn't hurt you as much as a recent one. Because how they look at it is you could be trending up or you could be trending down. So you always, even if you mess up, you want to make sure you stay on top of it because you don't want to show a bad recent trend.
Right. All right. Any final words? Any house cleaning?
No, man. Inbox me, man, with questions. Again, I don't know it all, but I know a lot about this.
You,
If you
you said
interested,
you said inbox you. So where can they find you?
oh, you better give me your stuff. In the chat. Hit me in the chat. I'll answer in the chat in public. Don't be
I was
scared.
gonna say, yeah.
Asking for everybody, because I can't do this for a living no more, bro. I don't got the patience. Y'all can't ask me 2 or 3 questions. I tell you something, and now I'm expecting you to do something. And it was just dump, just information thrown out the window. I've been there. I take this
Yeah.
personally, y'all. So I don't
Yeah,
want to
you got to
be
want
trying
it.
to hold. Yeah, y'all gotta want it. But if you put it in the chat and Mike tell me about it or I see it, I'm just surely gonna respond. And if you think I'm a fool or I'm wrong, I might make you look real stupid on the internet.
Right. We can invite you on the show. You know what I'm saying? You can substantiate, right?
Yeah. And again, if you do have something, excuse me, if you do have a rebuttal or anything like that, voice it, bro. Because truth be told, man, we all trying to be the best of the best. Um, and we all trying to better ourselves. Let me say that. I don't care about being the best of the best. Um, so if there is some other knowledge or a theory that may be different, that may have a different outcome, voice that because it might be somebody in that similar situation.
Right.
I've never purchased a farm, right? So maybe getting a mortgage for a farm, you can get it with a 415 credit score, and
Right. Right.
your credit mix is different.
Right.
Um,
USDA loan. No down
yeah,
payment.
USD,
Yeah. Yeah.
yeah. So that and we'll but listen. Further the conversation. That's what I say. Further the conversation. As long as you got something to say to further the conversation, I'll rock with you. But you get on that F boy stuff. I think there's a mute button, a delete button, or something on here. Or I just check.
Or
I just tell
block
your
button.
mama. I
Right.
tell your mama.
Mm.
And she ain't.
All right. Now. All right. All right. This is enough. Enough. All right. Now. Click the like button. Make sure you subscribe. Make sure you click the arrow next to subscribe and click all to make sure you catch all of our uploads. And make sure you please join the conversation, y'all. But with that being
Hey,
said, man, we out it. Go ahead. What you
I
got
just want to tell
before I
y'all
say
this.
we out of here?
Before he said we out this, I want to say this, y'all. I want y'all to understand. I did not want to be here tonight. I was tired. But like we always say, bro, if something happened to me and I don't make it this week, I hope somebody can go back to some of these videos and and have some value added to their life, bro. These conversations are necessary. So I found a way to, but for the 100 that have. So yeah, the push through is real, y'all. Y'all want more of what y'all been getting? Holla at me. Holla at me. And again, I'm telling y'all, this is free. This knowledge, this game is free.
Free.
Ask detailed questions. If you really want to go and like you really are in a situation, something that I can help with, I ain't never marketed myself to the world, but I probably can help you, and I ain't gonna charge you nothing. Send me a picture you standing in front of your little crib, your little duplex, or whatever you got. I'll be cool with that, and let me know that I contributed to that. I don't
Yeah,
want shit from
y'all.
y'all.
We are not YouTubers. We are not content creators. Although we make content, we are real life, real deal. You got a question, we're gonna answer it. We're not trying to monetize it unless you want to send a donation. But just speak up. If you for real, come on with it.
Yeah, yeah. Listen, you ain't gonna see nobody ask for nothing. I'm not trying to get
Nope.
no school donations for the
We
new
good.
Marcus Frederick Douglas Garvey.
FDMG, we good in real life. We
FDMG.
good. We good. We just here for the game. To give
And
it.
that being said, and that being said, peace to Pan Africanism.
Peace. Hey, what is it? What he say? Black. What he say?
I forgot.
Dang it,
Yeah, I
I'm
know what you're
messing.
talking about. Hey, hit
Oh,
us up
Black
if y'all
Queens
know.
forever.
Look,
I forgot.
If y'all know Dr. Umar, hit us up. I might be able to help you, bro. Y'all know a
Hey,
little bit about real estate.
just
I'm
saying.
serious.
I
I
know,
got
right?
you. I can
Ain't
make
nothing
some
to it but to do
moves.
it. It's so simple. It's crazy, bro.
Real
That's
talk.
why I don't
And
understand. That's a
hey,
whole nother episode. Don't do it. Don't do it,
somebody inbox me, Dr. Umar. Somebody put his
bro. He's
information
not
in the
gonna do it.
chat.
He's not gonna do it.
Hey, bro, I don't want nothing. If he really try to serve the community, and I got him. I ain't gonna show no money, but I got the resources.
Resources. That's right.
Yeah,
And that's the
I got him
problem
though.
right there.
Nah,
He don't
bro,
want
real
them
talk,
resources. He want the resources that crinkle to
bro.
make that
If he,
little
hey,
noise.
real talk. If he needs some bread, I got him. I ain't gonna trip. As long as his credit good. Just saying, bro.
All
We
right,
just
y'all.
talked
We
about
out.
that.
We out.